Hi everyone. Today let's start off by talking about valuation for the biggest stocks. Then we'll go over all the usual data and my accounts. Do me a quick favor and like and subscribe and hit the bell to help out the channel. So investors are paying high premiums for their favorite stocks. This is a pretty interesting chart. It took me a minute to actually figure out what they're trying to tell you here, but really they are saying PE ratios relative to these different factors versus the last 10 years and the last 35 years. So based on current PE ratios, the margins are super expensive. You can see more expensive is this higher chart. Momentum, what you're paying for is expensive, as well as returns. Balance sheets also expensive, and then growth very expensive relative to what you're getting for the PE ratio. Interestingly here though, they do mention that valuation actually a little bit cheap relative to what you're seeing for what you're getting. Dividends, no big surprise, they are not paying dividends nearly as much relative to companies of their stature previously. And then I think part of the reason that they are so expensive is because of the volatility that you're seeing with these companies. Relative to history, they have not been very volatile, which is interesting, and people are definitely willing to pay a premium for low volatility stocks that are performing so well. And then size, similarly, they are relatively cheap compared to their factor valuation. So interesting to see all those different metrics, definitely a different perspective from what you typically see. And they do explain this a little bit in the article. You can see Microsoft, Alphabet, NVIDIA, some of the top performers are definitely benefiting from AI, and obviously they are expensive relative to what we've been seeing, while the smaller valuation stocks are relatively cheap. And they mentioned that premiums for these companies are seeing extreme levels, definitely interesting. But they also mentioned this does not mean you should go out and buy those cheaper stocks with lower volatility and smaller companies. These companies still have a place in your portfolio, but understand that you are actually overpaying for them relative to history, and the smaller, less volatile stocks might actually be a better opportunity, and that would also help you benefit from a potentially higher dividend yield. So something to keep in mind for your portfolios. Moving over to fear and greed, you can see this did step down from the Thursday session into the Friday session, and it's down pretty significantly from a week ago. We're back into regular greed. And looking at the timeline, you can see we are definitely starting to roll over a little bit. We've kind of halted around that 60 to 65 area the last couple of times. We'll see if we end up stopping in that same zone. If this kind of breaks below those levels into neutral, I would expect something more like this, where you dip into that neutral zone, maybe get a slight retrace and then a lower low potentially. So keep that in mind. If this continues to break down into that 50 or below zone, then that's going to be an indicator for lower markets to come, in my opinion. But right now we've been seeing dips into this area, and then we ended up reverting back into extreme greed. And you can see all of the major indicators here are still in extreme greed. Breadth continues to hover in regular greed. The more interesting thing here is that safe haven demand has actually moved into fear. So it seems like people are starting to buy up bonds in order to protect their portfolios, which makes sense. We've been seeing a rotation into safer stocks. Utilities have been rallying, staples have been hovering, and it seems like people are looking for those safe haven demands a little bit more than they have recently, even though junk bond demand has not moved really at all. Moving over to the AAII survey, absolutely colossal on this survey for this week. 51.7% bulls, absolutely massive, almost up to that 1-year high, which we did hit in the middle of December. And everything else, obviously, well below historical averages, neutral, way below. Bears almost 10% below. It did step up a little bit from the previous week, which is interesting. So neutral's getting squeezed, bulls stepping up, bears stepping up slightly, neutral stepping down pretty significantly. But these are some pretty historically high levels for bullish, and as a contrarian metric, that should be a little bit concerning. Moving over to seasonality, you can see we were expecting a dip on that Friday session, which we ended up getting. If this continues to come to fruition, we should see a pretty aggressive move on the Monday session. And then if we follow election year, we should see lower lows into the middle of March. But if we follow the regular years, we should see sideways chop off of that dip and then potentially a higher finish for the month. If not, then we're going to be significantly lower. For the Russell has actually been outperforming a little bit. And then looking at the NASDAQ, still slightly lower than that dip on Friday, but not too much lower. You can see a lower low would form here on the 15th, but then we finish a little bit higher on the month, but mostly sideways chop for that last week or two. Moving over to the calendar, you can see bullish day Monday. I already talked about it. Wednesday expected to be relatively bullish. And then don't forget, we do have that third week options expiration. You can see CPI on Tuesday, PPI PPI on Thursday, as well as retail sales. We'll look at the overall calendar. We'll look at the economic calendar later as well, but just keep that in mind. Speaking of economic calendars, you can see here just a couple of Fed auctions. Just the Fed auction on Monday, Tuesday, CPI, like we mentioned. Wednesday, nothing big here. 30-year bond auction, fairly interesting. Thursday, PPI, core and headline, as well as core retail sales, definitely interesting. Fed balance sheet continues to hover in this same zone. It did step down pretty significantly 2 weeks ago, but this week was relatively flat. And then looking at Friday, not much of anything here, just the Michigan data, which has been interesting here recently. That is it for the Friday session. Moving over to Max Pain for the third week options expiration. You can see there's already 3.5 million options. I would expect that to get over 4 million or so. Put call ratio still extremely high, which is interesting. So people are still protecting their portfolios, but look how low Max Pain is here, 493. So that's a significant step down from current prices. Whether we get a Max Pain finish, hard to say. We did get a pretty neutral finish in the previous week, so we could push towards that Max Pain. 494 does make sense as a big call strike there at 54,000. Still have a really high put wall there at 495, so 68,000 there. And then these 500 levels, that's definitely interesting as well. Call wall really at 520. So really anywhere between 500 and 520 right now does make sense for a finish. But in my opinion, this is going to drift at least a little bit lower. Again, we should see a jump on Monday and potentially Wednesday based on seasonality. But this is for the end of the Friday session. Closer to that 500 level makes sense, which would be about a 2% drop overall for the week. Moving over to the charts, starting off here with the S&Ps on the weekly chart, you can see we were down 0.26%, so bearish on the week. Still holding above that trend line here, marking the tops here in July as well as the tops here in June. Interacted with it here in August, and then we did push through that level on 20 February week. Pushed further above it 2 weeks ago, and then this week still holding above that level, tested it a few times, but still holding. And then your resistance on the trends would be up around 5,300. Doesn't seem like we're going to get to that level. This has been a massive run. Let's see where we're at from the lows. Currently up to the highs about 25%, so very, very strong run. Obviously, it's been a strong swing. You can see there were a couple intermittent periods here on MACD. Definitely overbought. Peak RSI was at 76.8 on the weekly chart. Definitely very powerful move, and all of the structures are still bullish, but if this trend line breaks, that could be quite bearish. Currently sitting around that 5,100 area, and if that does break down, then your supports are around that 5,000 area, which does make sense when you look at that seasonality chart as well as the options expiration. And then moving over here to the daily chart, you can see down week. That down week really came on the Friday session, which was down 0.6. Going into Thursday, we were doing okay, which was up 1%. But now you can see bearish momentum, bearish RSI breaking down below the SMA. This has happened a few times. You can see here, doji, down move, retraced, another bearish candle, testing that 21 EMA and ended up pushing back up towards the trend. This is 2 weeks in a row now. We have not hit that upper trend line. Got pretty close to it. That is currently sitting around 521 or so. Didn't quite get there here. And then again, this week didn't quite get there. And now it looks like we're potentially pulling back to the 9 EMA, which is sitting around that 509.99 level. Do have support at 509.77 and then below that 505.08. And that 505.08 level is very important. You can see 21 EMA as well as VWAP in that same zone. If that structure starts to break, then you're all the way down to the 55 at 489.39. Moving over to the Tasty charts, it is worth noting we are way above that third ATR band here on the weekly chart. That is typically a pretty bearish indicator. You can see this previous run came right to that level, overthrew it in July, and then immediately pulled back almost to that bottom ATR band. Found support at the 144 EMA on this chart, and then ended up rallying right back to that third ATR band to the upside, pulled back slightly, hit it again, and now we've overthrown it really powerfully. Eventually this will pull back, but right now we have not seen it. 8 EMA on this chart sitting at 499.71. So again, on the weekly chart, seems like we're headed back towards that 500 level. That's a couple of indicators looking at 500. And then looking at the daily chart, again, that third ATR band has been resistance. We've been riding it here over the last several weeks. And right now that is sitting at 518.87. Got very close to that level, pulled back slightly. 520 would be that area we could find some resistance again. But right now we are trapped between the 8 EMA at 509.71 and that third ATR band. Moving over to the NASDAQ here on the weekly chart, you can see we were hitting that trend line Pretty interesting trend line. This is the very, very long-term one. Zooming out here, you can see it marks the top in August of 22, marks many tops here in April of 19, July of 19. You get the picture, but right now we are at that level. We hit it again this week, pulled back to that next trend line, which is the shorter term one. That's basically the same trend line that we were looking at on the SPY that we just barely got above. We're above it here on the NASDAQ as well. Makes sense. Didn't quite get down to that 9 EMA at 17,679. Momentum stepping down, but it's been choppy here on this recent run. Again, similar move, very, very powerful, almost 30% on the NASDAQ. We're right at the SMA. It did break below it at 68.99 versus 69.87, so broke below the SMA. It's the first time we've seen that here on the NASDAQ for a while on the weekly chart. Last time we saw that was coming off of this July high, so do keep that in mind. Definitely stepping up, and I'll show you that a little bit bigger. You can see previous breakdown here in July ended up going much lower. Got a breakdown here on RSI below the SMA again. That could be a pretty bearish indicator here for markets, so just keep that in mind. If we see another continuation lower next week, this could be headed towards that 21 EMA, which is a pretty significant amount lower. Also, let's go ahead and extend out this trend line. Would be in that 21 EMA area down at 16,863. Moving over to the NASDAQ on the daily chart, you can see that same thesis, hit that trend line, pulled back. We have not been hovering along that upper trend line. You can see we were here in December, again in January, almost here at the beginning of February, and since then we've actually been making still higher highs, but on that lower trend line, so a little bit of weakness. And then look at that selling coming through on that Friday session, big bearish momentum, RSI breaking down, clearly looking weak, and RSI has been trending lower, so that's worth paying attention to. Definitely looks a little bit bearish. In terms of support, you still have it at 438 and then the 21 EMA at 436.06, as well as VWAP right in that same zone. And then my next support would be that 433.24 level. If that zone breaks, then you're looking at the 55 EMA down at 422.59, which would be quite bearish. Moving over to the tasty charts here for the NASDAQ, you can see we've been riding that third ATR band and we did break below it. That's currently sitting at 444.20, 8 EMA sitting at 431.39. So we're right in that zone between those two levels. Did see a slight step up on volume. We hadn't seen that for a while. Last volume spike is going back here to the end of January. Not a whole lot. And then you can see here as this started to trend down, you started to see those volume spikes coming in, meaning people that were starting to buy here, and then you got that follow through on that next candle, which ended up giving us that next run. So we're starting to see a little bit of volume, something to pay attention to. Not super convincing yet, but you can see volume weighted MACD has been trending down. We did get one up candle there 2 weeks ago, and then this week was another step down. So volume weighted MACD starting to roll over. Definitely an indicator that we could be starting to break. This can take a couple of waves to be successful on its follow through. You can see here, rolled down to zero, followed through to the upside, rolled down a little bit, a couple of steps higher, and then we finally got that dip low. So doesn't mean that it's going straight down, but it certainly could, something to pay attention to. And then looking at the daily chart, you can see grinding on that third ATR band, just like the SPY. Since then, we've been finding resistance at the second ATR band, so that's a little bit weaker. Second ATR sitting at 447.92, hit that level and then pulled back below the 8 EMA. Still watching that 21 sitting at 435.58. We'll see if that level holds, and then you have the mid zone right there as well. If that area breaks, then you have 430.68 for that 34 EMA at the first ATR band to the downside. And then look at this volume here on that Friday session. Really, really powerful volume. Last time we saw volume like that ended up being a little bit of a bounce after that down move, so that's a little bit interesting. Didn't really give us too much of an indicator there, but this is definitely interesting to me. Big relative volume, momentum stepping down on volume weighted, and we saw a pretty significant down move on that candle. Moving over to the Russell, you can see we were up a little bit on the week, 0.46%. Through a big wick, ended up getting all the way to 210.41. Overthrew my level here at 208.22. Ended up closing below it. On the longer time frames, you can see we are making higher highs, so that's pretty good. But on the shorter time frames, we are definitely in this wedge. We'll look at that on the daily chart, but momentum still bullish, RSI still bullish here. So everything's still intact on the weekly chart. And then looking at it on the daily, you can see that rising wedge, tried to overthrow it on the Friday session, pulled back right into the middle of the range, held that 206.50 level, momentum showing a little bit of weakness, RSI still bullish, holding above the SMA. So Nothing crazy there, still in this rising wedge, still absolutely could push back up to this trend line around 210, get back above 208.22, but ultimately it does seem like this is going to potentially break to the downside, and then you would expect some pushes down into that 55 EMA area, which would be around the 200 to 198.31 area, which I have a level there at 198.75 as well, and then you have that lower trend at 196.75 or so. So something to keep in mind, as long as this holds, still looking at bullish, and then once that structure breaks, back down into those previous lows around 200 in my opinion. Moving over to the IWM on the Tasty charts, I did want to highlight that this actually looks a little bit more bullish here on the Tasty charts, and that's why it's important to look at these on several different charts, several different setups. You can see over through that ATR band, pulled back, found support at the 55 EMA, tested it here, found support there again, and you can actually see it seems to be accelerating a little bit, hitting that second ATR band, not quite getting up to the third one, that would be 212.75, but still holding well above the 9 EMA in terms of structure. This looks significantly more bullish. We have not seen any volume over this past couple of weeks, which is concerning, and the volume weighted MACD also not showing anything convincing. We're not seeing a solid swing like you saw here. We had a clear dip low, volume weighted MACD started to show bullishness, took a while to culminate. We'd had that second dip low, volume weighted MACD definitely showing buying, and then eventually price action did follow through, so definitely worth keeping in mind. This still looks bullish on the Tasty charts. Moving over to the Dow, this is a pretty different thesis. We are still at all-time highs. The week was quite bearish, 0.85, which is a big move here for the Dow, but look at this momentum chart. Very interesting, very steady decline, very slow decline, and then we saw a pretty solid acceleration here this week. RSI breaking below the SMA, 71.21, below that 71.56 level, so that looks good as well. You can see very, very slight break, early indications of some weakness to come, and we really have not seen that same kind of chop. Zooming back here on the Dow, it had been a very smooth move up to overbought conditions, dipped slightly here, and then continued higher. All-time high here for the Dow, and then relative high here on the RSI, very high reading as well, up at 76.28, super overbought, and then the gap down and fell. Still hold the level 387.77, which is interesting. Let's go ahead and look at the daily chart, and you can see that short-term structure. We had been hovering along this line, and then you can clearly see, even though we're making higher highs, the strength of those pushes has been weakening, and then you had a lower high, definitely showing a little bit of bearishness in the short term, bearish momentum, bearish RSI, big volume on that Friday candle after hitting that trend line and rejecting right at the 21 EMA, right at VWAP on the daily chart, and then looking at that 55 EMA down at 381.91. Just below my level here. So all of this looks quite weak, and if we do get into that zone, that's going to be a break of the longer term trend. So to me, definitely a critical point for the Dow. Doesn't mean that it can't bounce from here. It is support, but this has been showing signs of weakening for a couple of weeks at this point. And then looking at the Tasty charts here on the Dow for the daily, you can see that same thesis. Really aggressive push, slowing, got another push, slowing, and now we are basically flat over the last couple of weeks, starting to show bearish movements. And look at these volume pushes on those bearish candles. Did see a slight bullish push and then eventually sold off back to lower levels. And then on that Friday session saw a slight step up in volume, and the volume weighted MACD has been bearish for several weeks now, and it's going more bearish on that Friday session. Moving over to the equal weighted S&Ps, very different thesis here. The equal weights have been on a run. This is 7 weeks in a row of straight bullish movement, and this week was no exception, almost 1% to the upside. This was an all-time high, broke the level here at 164.87. That was the previous high going back to January of 22. And in my opinion, this is why we're seeing breadth widen out a little bit. Breadth has been hovering despite the weakness in the major indices, and that's because those stocks that are a little bit underloved right now are starting to see some love. A couple of weeks of bullish movement continues to go higher, whereas the market leaders are showing more weakness. Bullish momentum, bullish RSI, clearly trending higher, definitely overbought, 73.74, but still looks very strong, and right now that's a pretty good indicator that this is probably going to go higher. And then looking at the Tasty charts for RSP, you can see we did hit that ATR band. On the daily chart, that was trading at 165.85, hit that level, pulled back just below it. So that would mean we're probably culminating on that run, at least in the short term. You can see some volume coming through. Doesn't mean you can't get above it and hold for a while, but that's typically off of these kind of really strong dip lows. You can see low, lower low, bounced off that level, retested the midline, hit that upper level, and then we hovered along that for a while, overthrowing it really powerfully in mid-December, and then we broke down, eventually trading back up to that level. And usually you don't see this kind of hover along that level a second time unless it's a super powerful move like we saw on NVIDIA. That chart is bananas if you look at it on the Tasty charts, but equal weighted S&Ps, I would not expect it to continue higher above that third ATR band. Could certainly grind here, but it's not going to be a powerful move in my opinion. Moving over to the ratios, starting off with the SPY divided by the Russell and the NASDAQ divided by the SPY, you can see we did continue to see a little bit of Russell outperformance. We saw it last week, a little bit more this week. Not super convincing, but it was Russell outperformance. Momentum on this chart, bearish, RSI bearish, which means Russell outperformance set to go a little bit higher. Got the 55 EMA sitting down at 2.39, got a level here at 2.42. I would expect it to break below there. You can see we're below the 9 and 21 EMAs. So short-term bearish on this chart, looking like a little bit more Russell outperformance. And then NASDAQ actually pulling back pretty significantly, getting back below 3.55. So NASDAQ underperforming, bearish momentum, bearish RSI. So Russell, top performer out of the group. SPY outperforming the NASDAQ as the laggard. Moving over to SPY divided by the M2 money supply, we actually did get a bearish week here as well, 0.26 to the downside. You can see we did overthrow this trend line here. Last time we were above that trend line is going back to the pre-COVID high, which did culminate around that 2205 level and then pulled back really significantly to that lower trend line. Similarly, just barely missed it, pulled back to the lower trend line. We are again in that same region. If we saw a move like that, that would be a massive move. That would give you a move about 25% to the downside. Still would be a higher low from this previous low. Obviously, it's still an uptrend. Zooming out here, you can see what that looks like. Still very much an uptrend, but understand that the risk is definitely to the downside if markets pull back dramatically from this zone, and they definitely look extended. Let's go ahead and zoom in here a little bit. You can see momentum step down on the week. RSI pulling back a little bit, definitely overbought, well above the SMA still, so could show some bullishness. We have seen weeks like this. We had one here in 12 February, and we're still above that 24.49 level, so certainly could go higher, but definitely a critical zone. And I wouldn't say that there's too much more opportunity to the upside, in my opinion, based on this chart. And then looking at it here on the daily chart just for a little bit, you can see the 9 EMA sitting at 24.47, 21 at 24.23, so right in that zone, super important. And then we would pull back to that next trend line around 23.59, which even with a move to that level would give you about 3.5 to 4% to the downside, potentially to that 55 EMA, momentum bearish, RSI bearish. So keep in mind, this chart does look quite weak. Moving over to the Mag 7 here on the weekly chart, we did actually manage to turn a little bit of a profit here on the Mag 7, 0.24 to the upside, but look at that step down on momentum. First time we've seen that in quite a while. Did have one here at the beginning of January. That was relatively short-lived, ended up going much, much higher. But a pullback here, definitely interesting. If this ends up following through like we saw here previously, could get a couple of weeks of very slow trending, and then you get that acceleration, which would mean that price could still go a little bit higher, but like I said, not too much higher, just a little bit, and then you eventually give all of that back and then some, and then you see some sideways chop, potentially lower price action here with that bearish momentum, and then you finally culminate. Ultimately could go higher over the medium term, but short term, like I said, the risk is to the downside in my opinion, and you can see RSI levels right in that same zone, what we saw here previously in July, so getting into that same zone, 81.27, super overbought, hitting that upper trend line and then breaking down a little bit. Let's look at it on the daily chart. You can see that Friday session gave back a lot of gains. The Thursday was very strong, gave all of that back and then some, fully engulfing candle on the Mag 7, hit the trend line, hit the 9 EMA and bounced a little bit. If this structure breaks, you got the 21 at 336.95 as well as that trend support just a little bit below at 335.50 or so, and then below that 308.72, and then the 55 EMA at 308.90. And if those structures break, that is a lot of downside potential. And then if that zone breaks, then you're looking all the way down to the 144 at 227.26, which again would give you some massive down moves. So initial push 3.5 to 4%. Second push could be in that 11.5 type range, and then if those structures break, then you're looking at about 20.5%. Obviously, not expecting that to happen in 1 week or anything. Definitely would take a while to culminate, but that would be the price targets that I'm looking at if those zones start to break. Moving over to Apple and Tesla, starting to get into some of those single stocks. You can see both of these had a terrible week. Apple down almost 5%. We'd been watching 179.96 for a while. Gapped through that level, massive break, continued lower right to the next one, 170.90. Realistically, I'm watching 165.75. That's that most recent low. And then you got the 144 on the weekly chart sitting down at 162.36. Momentum bearish RSI, definitely bearish, continuing to trend lower. Look at these massive volume candles on those big sells. So everything here looks super weak. And then similarly here on Tesla, massive week to the downside here as well, 13.5%. And this is starting to look like a bear flag setup on the weekly chart. So you got a big down move, slight choppy bullish price action to the 9 EMA, and then a massive sell. So you would expect this to continue lower. Typically you get a similar move to the input. So we were down 264 to 180. Rallied back up to 205 or so. And if you got another move like that, that would put you all the way down into this zone here. Let's go ahead and see what that would look like. There, now you can see the move candle from top to bottom right here, and then another indicator would give you a price target around this kind of break neckline around 123. So keep in mind, Tesla absolutely could go lower, and it could take a long time for this to happen. You can actually see a very similar setup here. Big rally, bull flag, big rally continuation, and then if you did price those out, it would be a very similar move. So can absolutely take weeks to happen. This is the same setup on a lower scale. Big breakdown, bear flag, potentially a big breakdown happening right at the bottom of those wick lows. So both of these look super weak in my opinion. Moving over to Broadcom and NVIDIA, starting off here on the daily chart, you can see Broadcom had a big bearish day on their earnings, ended up down almost 7% at the 21 EMA. So in terms of structure, still intact, but that is a big sell. We haven't seen a sell that large in a while. Their previous earnings was a colossal beat and it went up a ton. You can see it here, massive beat, continuing higher here. Looks very, very strong on a trend basis, but definitely worth paying attention to. Quite bearish there. Let's look at it on the weekly. Fully engulfed the previous week. Definitely showing some weakness, RSI breaking down, massive volume on that sell. And then similarly here on NVIDIA, big sell on the Friday session, 5.5%, and look at that volume. Almost got to the trend line, just barely missed it. Sold off right to that shorter term trend line, breaking through that longer term one, fully engulfed well the 2 previous days, and now we're at that level. If this breaks, that could be quite bearish. We have seen it before, pulled back to the 21, ended up bouncing much higher, 21 in this case down at 779.31. Momentum starting to roll over, similar to what we saw here. Absolutely could do that again. Find some buyers in that zone and then we'll see. But it definitely seems like NVIDIA could be finding a little bit of weakness. Let's look at that on the weekly chart. And you can see it here. Still a bullish week, 6.38%, which is massive. For almost any other stock, not super incredible for NVIDIA. And it's been on a massive run. You can see all of these bullish candles in a row. No bearish pullbacks. But look at this RSI read, 89.34. It's due for a pullback. And here on the weekly chart, actually, you can see it did touch that trend line. So that trend line is important. Markets do recognize that. Definitely good to see that. And that is another test of the level. And clearly markets did not like it. That seems like an upper resistance point, at least here for the short term on NVIDIA. Moving over to staples and discretionaries, you can see staples was still bullish on the week, whereas discretionaries were still bearish. So staples almost 1% to the upside, hitting that trend, found a little bit of resistance, momentum bullish, RSI still bullish. So everything still looks good here. We did see a little bit of choppy price action over the last 3 weeks, but overall weekly structure still bullish, well above all the EMAs and SMAs, finding some resistance at that 75.40 level. Want to see it get above that and push to 77.50, and that would be the high here going back to April of 23, starting to get a little bit of resistance here at the peak from July. So staples look solid, still looking okay. It's maybe waning just a little bit. You can see it's starting to slow a little. Want to see that accelerate and push towards that 77 area. And then looking at discretionaries, hit 185.36, pull back. I'm sure Tesla is pulling down on this ETF. And then looking at the levels, 180.10, definitely resistance. Got the 9 EMA just a little bit below that, 179.15, as well as VWAP 177.37. Right in that same zone, and then the 21 EMA down at 172.19. And then while I was looking at this, you can see there's definitely some structure here. Mark to top here, end of September, mark to top in December, and then marking that same top, hitting that trend resistance. Seems like we're rejecting pretty strong. Previous times broke down pretty substantially, about 3.5%, already down 2.5%. See if we pull back another 1% or more, but it seems like rotation into safer stocks is still happening. Moving over to industrials and utilities. Been talking about these for a while. Industrials continues to go higher very powerfully. This is actually driven by AI in my opinion. People think industrial sector is going to benefit a lot from AI, and it certainly could. This is going higher. Everything still looks bullish. Right at the trend line, might overthrow it a little bit more, potentially up to that next level, 125.75. It's been straight up, so there's no real levels in here, and this is all-time highs. But the more interesting trade in my opinion is utilities. Very powerful week. 3.29%, very strong. You can see we had a week like this, ended up pulling back a little bit and then continued much higher over the next several weeks. Seems like utilities is finding some solid movement, low, higher low, looking for this to push to a higher high, potentially in that 67.18 area. Momentum bullish, RSI bullish, so utilities looking like a very strong setup. Moving over to breadth, you can see both of these still look bullish on the weekly charts. Another bullish week on both of them. Momentum bullish, RSI bullish on the 20, looking for it to push back into that 86.50 level, potentially even overthrow to the 98 area. We don't get there super often. You can see we did get to that same zone in April of 20. So keep in mind, still bullish, looking for some higher highs to come. And then 50-day average, similar thesis, strong candle, back above all the EMAs and SMAs, momentum ticking towards bullish, looking for a test of that 92.25 level. And that is typically where markets top out. You can see again, June of 20, we did overthrow that level a little bit, not by much, up into that 97 area. Typically 92.25 is the more common zone, and that is what we hit on the recent high in January on the breadth charts, and it seems like that's where we're headed again. Moving over to breadth on the 200-day average, you can see we actually made a new high close here relative to these other highs. So we're above the beginning of January, above July from last year and February of last year. We're actually at a new high. This looks like we're starting to push up to that 91 area. That is typically where markets top out. You can see we do overthrow it sometimes. This was April of 21, got all the way up to 96, 97 area, but not super common. And this is starting to look like a very shallow pullback. And now we're headed towards higher highs. So breadth overall across markets, across time frames, does look quite bullish. Moving over to yields, you can see the 2-year pulling back pretty substantially. This has looked quite weak across yields, which is probably propping up markets a little bit. Even with that, we are seeing tech kind of hover, if not pull back. So that's kind of interesting, but the rest of markets have definitely benefited from this. And that's partly why I think the Russell is outperforming. Yields have looked weak. They're definitely pulling back, especially off the back of the comments of Jerome Powell in the Senate. Seems like yields are set to go a little bit lower. Still have not seen that reversion, which is interesting. 10-year probably headed towards 4%. 2-year probably headed even lower eventually. But this inversion has lasted a very long time. Moving over to the dollar has absolutely shown weakness. Makes sense with yields going lower. This is probably propping up markets at least a little bit. We did see a bit of a wick rejection on that Friday candle, but still bearish. Go ahead and look at the week, probably super bearish. And you can see it here, definitely bearish. Absolutely weak, down over 1% on the week. Typically when you see weeks like that, you can see a one here, 1.4%. You get continuation. Similarly here, 1.8% continuation here. 144 EMA, definitely a potential at 101.62. Got some trend support in here, but realistically, I would expect to hit that 144 EMA similar to this. Pulled back, hit that level, found a small bounce, clear lower high, absolutely breaking lower. We'll see if it holds that zone. That could be a higher high. That could be a higher low, and then we're going to see sideways chop. If that level breaks, you got the 200 all the way down at 99.18. Seems like the dollar is finding a little bit of weakness, which is interesting. Moving over to bonds, J&K still hovering in the same zone. Bullish on the week, tested 94.82, overthrew it pretty substantially. It does kind of seem like this is set to go a little bit higher. It's back above all the EMAs and SMAs. Held a higher low on this candle as well. Momentum, not bullish. RSI, still mixed here. So definitely still consolidation, but it looks slightly better with that new wick high relative to the last few weeks. And then the better trade here, in my opinion, is TLT. It seems like bonds are headed higher. People are starting to get into that market as it seems imminent that the Fed is going to cut, whether it's in July or June. It seems like we'll get that first cut in that time frame, and that's starting to send bonds higher. It seems like the narrative has shifted at least a little bit. We knew that cuts were coming, but it seems more probable, in my opinion. And you can see 3 bullish weeks in a row. Strong move here, 1.33%. Couldn't get above 96.50, so that is still resistance, but 55 EMA at 97.26. If we can get above that, then everything should be quite bullish. And this is still a low, much higher low, holding that 21 EMA very solid. solid. That's what I would be looking at as resistance. We are right on top of VWAP as well, 95.72, but momentum bullish, RSI bullish. You can see RSI did push back above the SMA, so that's quite bullish. Everything looks good here over the medium time frame on TLT. Moving over to the VIX on the weekly chart, bullish candle on the week, 12.27%, very strong. Momentum bullish, RSI bullish, almost tested the SMA, bounced higher, right at that level, 1470. You can see very important. We've tested it multiple times. Closed right there. Overall, this still looks a little bit bullish to me. It seems like we're going to see a couple of wicks higher. That's why I've been talking about some bearishness across markets. There's still mixed indicators out there. Like I talked about, breadth still looks good, and yields and the dollar both look good for the equity markets, but the VIX showing some weakness set to come, which makes sense based on the technicals we saw on major indices. So keep in mind this could absolutely go higher, meaning that we could see a dip into that options expiration week, which is typically the bottom of markets for the March period, and we'll see if that comes to fruition, but the VIX definitely showing some warning signs here in my opinion. Finally, moving over to my accounts, you can see I did manage to give up just a little bit of money, about $100, which was pretty good considering that the NASDAQ was down so much on the week, almost 1.5%, and I was only down about 0.1%. So definitely the strategy was working pretty well throughout the week. My account almost flat. Most of the markets down on the week. IWM still bullish here, sold at 207 for the Monday session for $1.15, trying to collect that credit. And then I do have a poor man's covered call here deep in the money for 468 days from now. Probably didn't need to go that far out, but we'll see. If this structure starts to break down, I will take off that poor man's covered call. Right now, the structure is still intact, but watching those areas very closely. And then for the Monday, sold a 444, a 440 here for $1.60, so trying to collect that. And then for my main position, sitting on some puts for the Monday session at 441 for $3.68, so looking to buy the stock down at 437.40 or so that's quite a bit lower. Markets are above that a little bit. Obviously, the markets are closed right now, so that spread looks ridiculous, so it's hard to tell exactly where they finished. I think they were down about 50 cents after hours, but still looking to get in a little bit below the markets, and I can roll this out another day if I need to. So being able to protect myself on these puts does seem to be helping versus holding the shares. And then I still have a call here for 443. If markets do start to show a little bit of bullishness, I can absolutely put those shares back on and roll this call in to try to profit in the short term, which does make sense potentially based on seasonality with the markets looking with a slight bounce as a possibility. But right now I'm positioned for a little bit more protection versus opportunity to the upside. Let me know down in the comment section what you think of valuations for stocks or any of the charts that we saw here today. Definitely some mixed signals out there, but it seems like short-term bearish is the thesis. What is your thesis for the upcoming week and options expiration? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.